Back to EG Financials. Today we're taking a look at the forecasts released by Fannie Mae, a top institution to release forecasts on the economy and the housing market. Today we'll primarily focus on home price predictions for next year and volume-driven predictions. And then later on I'll make an additional video covering the economic forecasts. And before we get started, make sure you subscribe and drop a like. It helps these videos. And let's get started with the housing market forecast. First, we'll take a look at the volume predictions, and then we'll take a look to see what they're expecting for home prices next year. So, on the top half of this report, we have volume driven metrics, starting off with housing starts. We can see that in 2022, it ended the year with 1.5 million housing starts, and they're expecting 2023 to end with 1.3 million. And then in 2024, we'll see a continuation of this decline at 1.2 million housing starts. Next, we have total home sales. 2022 had 5.6 million home sales. 2023 is expected to end at 4.8, and 2024 will see a slight recovery at 4.9 million home sales. And let me zoom in a little more. Next, we have Fannie Mae's price predictions for next year, and they're expecting 2023 to end the year 1.2% lower than 2022, and then a continuation of this decrease in home prices to end 2024 with a decrease of 2.2% year over year. And if we look at these two midsections, we can see the quarterly breakdown for 2023 and 2024. Next, we have their forecast for the 30-year fixed rate. 2023, they're expecting it to end at 6.4%. And in 2024, they're expecting it to end at 5.9% for the 30-year fixed. And as of today, June 26th, we're actually close to about 6.9% for the 30-year fixed. And let's continue on to some of their commentary that they released along with this forecast. I made some key highlights and we'll go ahead and cover those. Fannie Mae is still expecting a recession due to rapid tightening of monetary policy and late stage business cycle dynamics. Fannie Mae expects the Fed will maintain its restrictive monetary policy stance until it's abundantly clear that inflation pressures from the labor market have eased. And they also make comments about the housing market's challenges, which include the lack of existing homes available for sale, a trend that did not improve during the spring home buying season. More home sales are typically put on the market. This has supported a return to home price growth and appreciation in recent months and continued to boost new home construction. And they expect the continued tightening of credit conditions, slowing bank lending, and shrinking money supply will eventually lead to a downward turn in business investment and hiring, eventually leading consumers to pull back on spending, coinciding with the recession. And lastly, housing activity continues to be shaped by the lack of inventory available for sale. Prices have firmed in recent months after softening over second half of last year, and new home construction has taken the place of some missing existing inventory. That's it for today. I try to make these videos quick and concise. Make sure you follow for more updates. Thank you.